Hi everyone, it's Tim Melvin of the Tim Melvin Deep Value Report and the Banking on Profits newsletter, coming from you down here again on a sweltering hot 93-degree day in Central Florida. Absolutely love this time of year, enjoying being down here. Wouldn't mind popping over to the beach maybe in the next week or two. That would be nice, but also highly unlikely. Once again, the weekend video is coming to you on Tuesday because the weekend just filled up with entirely too much stuff and too many things going on. And I have to tell you, next weekend doesn't look any better. My kids are 4 years and 1 day apart, the 23rd and 24th of May. So I got 2 birthdays to celebrate this weekend. And apparently my son has put together some sort of pig roast and beer bash over at his girlfriend's parents' place not too far from here. So I expect that we'll be out there having some cold adult beverages and enjoying some roasted pork most of the day on Saturday. Neighbors' kids are in from California. They're having a little party on Sunday. Doesn't sound like there's going to be a lot of time for shooting a video once again this week. Maybe we'll get it done Monday on Memorial Day. We'll see. Anyway, just another week in the markets. The stock market's up 1.18% as measured by the S&P 500. The all-world URTH index is up. It's lagging. It's only up about 21 basis points. Once again this week, what's our leader? The QABA index of community bank stocks. Now, I had a chance last Saturday. I spent almost 2 hours. I did a teleconference with an investment group back in Arlington, Virginia. They meet, I guess, at the library there on Saturdays. Had a lot of fun doing it. And if there's anybody else out there that would like to set up a teleconference with an investment group or just a group of friends, I had a ball. I'd love to do it again. So just get in contact with me. Drop me an email at tmelvin@gmail.com if you want to, or you can always email me through the MarketFi site. But anyway, we talked about bank stocks, and afterwards in the Q&A session, one of the attendees told me that he'd been reading me on Real Money for some time, and I'd never come across as quite that forceful before. Well, I guess I try to be more polite when I write on Real Money, but I did write a column today where I basically was a lot more forceful about what's going on with the community bank stocks. I kind of got on my soapbox, and I pounded the table a little bit. I'm going to do it again tonight. Listen. If you look at community bank stocks, every time I talk to somebody about this idea of buying these $20 and $50 million market cap banks, or even smaller banks, we just had one of our biggest hits in a while. We had a bank that we bought at a $5 million market cap. Took almost 2 months to buy 600 and odd shares. But here's the thing: the bank just got taken over for a 100% gain in a little less than 2 years. I'll play that game all day long, guys, no matter how long it takes me to trade in and out of the stock, okay? 100% gains, 50% gains over 2 to 3 years. That's real money and huge compounded rates of return. So, but anyway, I start off, and I'm just, if I ever meet Charlie Munger in person, I'm going to kiss him on the lips for what he said at the Daily Journal annual meeting earlier this year. He told investors that, for most of his career, there's this huge 10% tailwind, so all you had to do was do better than the tailwind, and you put up fantastic numbers. And, of course, he and Warren did much better than the tailwind and put up enormous, just logic-defying numbers over their career. But he said the tailwinds probably aren't going to be there, and he doesn't think that you're going to be a huge success investing in the bigger stocks. In fact, he added, if you wanted to make money going forward in the stock market, he thinks you should look at inefficient areas of the market and become adept and somewhat expert at investing in those. Guys, if that's not just the absolute description of the community bank stocks, I don't know what is. Then I want to take you back to Roger Ibbidson's excellent study on liquidity, where he found that illiquid stocks outperformed liquid stocks, and it went across the board. It was really, illiquid stocks outperformed liquid stocks, illiquid growth stocks outperformed liquid growth stocks, and illiquid value stocks outperformed value stocks, the more liquid value stocks. Now, when you put this all in the style box and you go up here, illiquid stocks, 18% a year from 1972 through the end of 2011. Come down here, liquid growth stocks, it's about 2.5%. Now, look at your own portfolio first, and talk to everybody that you know. Take a look at what you own. And I bet you're really way down here in this lower right-hand corner with a bunch of really cool, currently exciting, but probably not going to end well, exciting liquid growth stocks. You need to, I said in the article, you need to think about buying stocks like you do closing on a business deal or on a piece of property. You know you can't sell it at the push of a button in half a millisecond. So you're going to put a little thought into this process, and you probably ain't planning to own it 4, 5, even 10 years or longer. You should be buying stocks exactly the same way, and you should be focusing on community bank stocks when you do this. I took my community bank basic screen and I went back and I back tested it to 1999, and I put in a liquidity restriction. They couldn't trade more than 10,000 shares a day. The returns were already one of the highest returning screens and back tests that I've run in my little back testing binge over the past couple of months. They went markedly higher. I mean, remarkably higher. When you restricted the liquidity, just focused on the smallest, least liquid banks, you made a lot more money focusing on those over the last 15 years. I'm not even going to quote the number because it's sick stupid. And by the way, in 2008, when everything went boom with the banks, these little banks actually did a little bit better, just a little bit. Everything got hit in 2008. We know that, and banks were a central focus of the problem because collateral values were falling apart. But actually did a little bit better than the bank and than the overall market. Volatility over the extended 16-year period of the test was markedly lower than the S&P 500. So there's no excuse not to be involved in these more illiquid community bank stocks. If you're trying to whip the money around based on stuff on your charts and you're good at it, you're doing it 12 hours a day, well, you're not watching this video anyway. You're home doing what you do. If you want to make serious money in the stock market, you need to be focused on illiquid stocks with value characteristics, and that's the absolute description of a small community bank. Now, I've never seen an idea like investing in the community banks that so few people are participating in when everybody in the industry and the sector themselves is telling you exactly what's going to happen. The bank CEOs are not only telling you they're going to buy other banks, they're telling you where they're going to buy them. I just looked a few quotes up here today. Hey, this is from SNL Financial CEO Paul Rainier of a bank. Says this is out in California. More deals are coming because the cost of doing business for the banks continues to go higher, and the only way to deal with that is to spread the costs across a larger asset base. The only way to achieve meaningful asset growth right now, in my opinion, is to buy in other banks because the organic growth just is not there in the banking industry. His bank will be looking for more well-priced deals that would be a good fit. They just closed on a deal back in November. Now, Terry Zink of Cascades Bank did a local newspaper article last year, and he talked about how he was looking in Oregon, maybe Washington, and his most recent quarterly earnings report said, we are continuing to look for and want to be opportunistic as we make more strategic acquisitions. Now, he's just told you something, okay? He's told you he's based in Oregon. He wants to do more deals in Oregon, and he might be willing to look at the southern portions of Washington state. Now, if that doesn't have you out there looking for small banks trading at a good price in Oregon and southern Washington, then you may want to rethink your decision to manage your own funds and hire an outside manager, because that's a slam dunk. He's got the money. He's told you what he wants to buy. The current going price is 1.35 times book, so we're going to assume he's willing to pay somewhere around that number for a sound financial bank. So if you could buy one, let's say 85% of book value, you've got a built-in 50% upside. I know of at least 2 banks in the service area right now that trade at that number. And yeah, I own them. I bought them, of course, not too long after he made some of these statements, as a matter of fact. Larry Mazza of MVB Financial in West Virginia said he's looking for branch and whole bank buys to expand in the West Virginia market. He needs to buy to increase his footprint across the region. So he's looking at West Virginia banks. It's relatively easy, guys, with a screener to break these things down. And of course, if you're a member, you can just write to me and say, hey, Tim, what are the banks in Oregon that I should be looking at? Or what's in that West Virginia market we may want to consider? I'll do that work for you. That's kind of part of the deal. Let's see, Gerald Host of Trustmark in Jackson, Mississippi, has said he's looking in the Southeast. He wants to look in his internal Mississippi marketplace. He's willing to look at the Florida handle, maybe Georgia, possibly Louisiana. Now, he's just told you where he's looking to buy banks at a good bank at the right price. It's just a matter of getting in front of him and go buying the good banks that trade at good prices so you're there when he shows up with his checkbook. We did that. We're there, and we expect that we've got several banks in that region. I'm not going to be surprised at all if we end up selling some of our shares to Trustmark at some point in the not too distant future. Scott Custer of Yadkin Bank has said he's looking to focus on North Carolina. Interestingly, Dana Humstreet of Home Trust Bank shares in North Carolina told me late last year that he also is looking in North Carolina as well as Tennessee and Virginia. Guys, there's a dozen banks in North Carolina, Tennessee, and Virginia in that marketplace that fit into the parameters of the trade of the decade, have great loan portfolios, plenty of capital, and trade at an attractive price to book value ratio. We own a lot of them. We'll probably end up owning a lot more. Now, Rick Weiss, who's an investment banker at Ambassadors Financial Group, they do investment banking for banks. It's $500 million. Under that, banks are looking to sell. There's too much competition. Costs are too high. He expects to see more banks hit the market looking to sell later in 2015, 2016. By the way, every investment banker in the community banking business or banking business is saying pretty much the exact same thing. Whereas a Triumph Bancorp CEO is looking to buy what he calls stress banks, banks that are maybe having a little bit difficult time, and there's a lot of them having a harder time turning a profit. The boards are exhausted after the last 5 or 6 years of just very difficult operating conditions. So let's see. John Corbett of Center State Bank. We have the flexibility now. Now, talk about being in a catbird seat, okay? We have the flexibility now and the capital to consider additional accretive merger and acquisition activities or increase the dividend and act on our stock buyback plan. There is not a single bad outcome there for shareholders. It's going to grow by M&A or he's going to increase your dividend and buy back some stock from you. Happy options to have. But he's open to and willing to look in his region to buy additional banks. Independent Bancorp in Texas has said that they continue to be involved in M&A discussions, and they expect to see Texas M&A activity pick up as pricing in that market still not down to my levels, but pricing is coming down as a result of weakness in the oil patch. If that weakness continues, we may actually be able to get some of the smaller Texas banks into the portfolio at the right price, and that would be pretty exciting because remember, Texas is not just oil. They also have a huge tech economy, agricultural, so there's plenty of decent, strong economic activity in Texas. So if energy prices bring those banks down, we're going to be excited to buy them. Because of our rather strict non-performing assets criteria, I doubt that we'll get caught up in a situation where energy loans cause us to be into a bad bank. Gerald Ford at Hilltop Holdings has said that he is absolutely looking to expand the bank, possibly into the Houston market by buying additional banks. Now, I want to back up here because Hilltop Holdings is a stock that we were huge on. And it's like this is value investing in a box lesson here. It traded actually for less than that cash. We were buying it in 2011, $8-9 a share. They had like $11 a share in cash. They owned a small insurance agency, and it was formed specifically to take advantage of the credit crisis and look to buy distressed assets at a great price. Mr. Ford got rich. Not quite Andy Beal rich, but he wasn't far behind him by doing the same thing, buying distressed banks and assets across the state of Texas during the S&L crisis and throughout the 1990s. Made himself a billionaire. Hilltop's Holdings was his follow-up act. That's HTH. We started buying the stock around $8. Still holds on. It's trading up around 22. Hit as high as 24 earlier this year. We have a 32% compound rate of return on our position in that stock. It didn't surpass our purchase price until, I'm going to say, late 2012. For a couple of years, we had just very small gains on the books, but every time you looked at the number, the book value was going up and everything was getting good, and the bank never got overpriced. It's still not horrifically priced today. They own a bank, they own a large mortgage lending operation, and they also now own a brokerage firm and a research boutique in Southwest Securities. So value investing in a box. Pay the right price, wait for good things to happen. That's exactly how that played out. Anyway, don't want to get off my subject. The trade of the decade in community banks. This is not just me. I didn't dream this up. to sell subscriptions. It wouldn't be a bad idea if I'd done that, but I didn't. This is a real opportunity. The CEOs are telling you, I'm going to buy. I'm going to buy in this neighborhood, and these are the type of banks I want to buy. You can just follow the money here. Deals don't get done in a minute, but they are getting done. We've had 3 takeovers so far this year in our bonus picks portfolio, all at fairly large gains already. It's only May. We had a total between the main portfolio and the bonus picks last year of 10 takeovers. So I think we may hit that level, maybe even a little higher before 2015 is over. We're also seeing lots of new buyback announcements, lots of stock dividend increases. Conditions are improving as a result of credit improvements across the industry. So we're seeing huge earnings numbers in the smaller banks. And you're in a great environment, and you've got an M&A kicker because the costs of compliance and upgrading technology in today's very competitive marketplace where younger consumers, my kids haven't been in a bank branch in probably 5 years. Probably won't go one again unless when my daughter moves to Chicago later this year. She has to go in to open new accounts to have a local bank. Other than that, they do everything on the phone and the computer. And the technology to stay up with the big guys there, the cost of that upgrade is another factor that's making a lot of the small banks look around and go, we just can't be competitive. It makes more sense for us to sell this institution to a larger institution. But at the same time, we're not selling it for the current 90% book value. We're going to get 1.35. Huge embedded opportunity just between the current multiple being paid and our ability to find and buy small, financially solid financial institutions at 85% of tangible book value or less for the banking on profits portfolio. They're not sick banks, right? We're not going around garbing up sick banks hoping, flipping a coin somebody buys them. Although I will tell you that's not a horrible strategy, but that's not the one that we're using. The ones that do get bought have huge returns. The few that run off the books, go out of business, there's only been a handful this year, will be more than offset by the huge gains. But that's not the game we're playing. We'll talk about that more maybe at another time. They've got lots of capital. Their non-performing assets are generally 3% or less and have been trending down for several quarters in a row. They're just great, financially strong banks that, because nobody really seems to care about this idea, are still trading at attractive multiples of book value. You can even increase your odds substantially. Remember the Stern AG study that I've talked to you guys about many, many times. 30% chance when one of these activists get involved that it's going to get taken over. The hit rates for some guys like Larry Seidman and Joe Stillwell are actually, I think, a little higher than that. But, as I look through 13D filings every day, I'm still seeing that Joe Stillwell's buying banks. Larry Seidman is making significant investments. They both have done so within the last 30 days. Clover Capital, Basswood, the former Stifel Nicholas, and now Maltese Capital is still very active. Michael Price is still buying the small banks. Paul Isaacs at Arbiter was a buyer of small banks in the first quarter. So it's a lot of money still coming in. You can ride right behind these guys at prices very close to what they paid for their shares and sit back and just let time and value and their activist efforts make you a ton of money in small bank stocks. I don't know why more people aren't doing this. I guess I'm kind of glad that we sort of have the field to ourselves. But so many people out there sitting drawing lines on stock charts in the evening, trying to figure out how many iWatches or iPads Apple's going to sell, how many clicks Google is going to get, whether or not Tesla can ever solve the battery problem. You probably can't do that any better than the other 10 million guys and gals that are trying to do the same thing. There's just a handful of us doing this community bank stock stuff, and we've got the tools in the portfolio to help you learn it. I'm not just interested in selling you a subscription forever. I want you to be a part of a community and eventually add back to it with banking on profits. But we've got an incredible opportunity. If you're not already a member, please go to marketfy.com, sign up, join us. You get a 30-day money-back guarantee. But I'm going to get a little more forceful about this. It's the trade of the decade, probably one of the biggest opportunities you'll see in your investing lifetime, and you need to set aside these ideas, that is silly ideas, that you need some sort of magic liquidity to invest in a business, because that's what you're doing when you buy a share of stock. You're not trading an electronic blip on the screen, as so many seem to think. You're buying into a business, and with community banks, you're buying into a great business with a huge merger and acquisition wave occurring, even as conditions improve and raise valuations. It's a tremendous opportunity. There's my sales pitch for this week. I have no idea when I'll get to the video next week. I'm going to target Monday, but I'm also going to bet you something happens on Monday that I need to go do, so we don't get to you till Tuesday again next week. But anyway, this is Tim Melvin of the Tim Melvin Deep Value Report and Banking on Profits down here in sunny, sweltering Central Florida, and I will talk to you guys next week.